the moves that we've seen over the last week, pair it back to fundamentals and sort of explain to me what is playing out before us.
Well, I think we've had a bit of a news vacuum with respect to what's been happening. You had the ISM numbers come out, and last week was more of a holiday shortened week, as you know. This week is more of a low volume week. The volume yesterday wasn't all that exciting. I mean, if you're breaking through these technical measures from a traditional standpoint, you want to see a lot more volume, because then you would say that we're seeing this exhaustive selling. But the last hour or two, Jonathan, of trading has been very telling over the last 10 or 15 sessions. Has really kind of helped tell what's going to happen going into the next day. So again, I'm looking forward to earnings. I think earnings are going to be good. I think the telltale sign is that over the last couple of months during all of this hullabaloo, which is a word I just kind of came up with.
Well, you can have it.
With all these chiefs up here, I got to come up with something. You know, it's about earnings and fundamentals, period.
Yeah.
And earnings have been going up. Revisions are going up for not only 2018 but 2019. So guess what? Let's just take a deep breath. We've had more 1% moves in both directions so far in 2018 than we had all of 2017. It's back to stock picking. It's back to active investing. It's back to focusing on fundamentals.
It's been really, really difficult to clear the vol shock of 2 months ago, Julian. And I just wonder how unusual that is. The whole term structure of the VIX has done this, and it remains inverted. And a lot of people were saying, well, this is going to go back to normal eventually. When's eventually?
Well, there's two things at play.
What's normal?
That's the first question. What is normal is really the critical issue. You know, we would argue that when people call the VIX a broken product, we would say it was actually a broken product for the prior 2 years before you cleared out the short volatility products. Now what you're actually seeing is what the market is really. The long-term average in the VIX is 19. So by those standards, trading in the low 20s is really not abnormal at all. The bigger question is, and Brian just pointed this out, is that when are we actually going to return to the focus on earnings and the economy? The problem right now is what we used to call on the trading floor tape bombs, whether they're tweets or they're news about autonomous vehicles, or their data privacy concerns, or their North Korea or Iran. The market is looking at geopolitics and other issues right now. We need to get through that.